Hello, everybody. Welcome to today's episode of The Daily Dose. Today is Monday, October 10th. If you like this type of content, be sure to subscribe on YouTube or follow us wherever you listen to podcasts. I release an episode like this every single day that the market is open. Just kind of quickly recapping what happened that day, giving my thoughts on it, and then over the weekend, I release a longer, more in-depth episode, kind of going over what happened that week, but also just giving my own insights and thoughts about stocks, Bitcoin, the economy in general. It's different every week, so be sure to listen to that or watch it as well. You can find every episode on YouTube or wherever you listen to podcasts. So let's get into today. We were down once again. U.S. stocks extended a downtrend on Monday to start the week lower as Wall Street steered into third quarter earnings season. So there's a lot of uncertainty in the markets right now. I think a lot of people are anxious to see everything that's going on, how it's going to affect earnings over a more extended period of time. I also think there were a lot of people going bullish after what we saw in the beginning of last week, and that maybe they got a little bit ahead of themselves. We'll take a look at the chart in a second, but it was looking bullish, but it's completely reversed now. So if we look at the year-to-date stats so far, I like to look at these every once in a while. The Nasdaq's down 32.6%. The S&P's down almost 25%, and the Dow's down about 20%. And the reason I like to look at these stats is because you can kind of gauge where you're at in the bear market cycle. If you've watched any of our previous weekly videos, in the past couple, I've been showing a chart that kind of lays out every single bear market since 1835. So literally every single bear market that we've had in the US. Excuse my voice. I'm sorry about that. And I like to use that because I like to kind of find a sweet spot in between the median and the average for the length of the bear market, the peak to the trough, all of those statistics. And if you look at the peak to the trough, as far as a bear market goes, usually it's in the mid-30s. As far as percentages go, I think the median was around 32% and the average was somewhere around 36% for a bear market cycle. So, and that's for the S&P 500. So you can kind of gauge where you're at by using that and also the time. So I think typically the peak to the trough is around 11 months. So, or 11 months to 13 months maybe. Sorry about my voice. But I've been using that. That's why I bring it up sometimes. So let's get into the charts to see what happened today. So if you're watching on YouTube, you can see that I have this zone from June when we saw those relative lows. And it's from about 36.35 to 3,700 on the S&P 500. We did break below that Friday, not of last week, but 2 Fridays ago. And then we cracked back above. We had those 2 monster days that were the biggest 2 up days in a row since the COVID pandemic, since March 2020. And then we returned back down to these lows. So we almost touched the bottom from 2 Fridays ago and then bounced back off of it. We are still below this zone. So it doesn't look super bullish as far as technicals go on the S&P 500. I do expect to hit this channel line at least one more time in this cycle. When we have broken through a low in this bear market, we have typically touched the channel line or come very close to it. So that's what I would be expecting. In the event that we didn't touch this channel line, the level of most significance that I would expect buyers to come in is around 32.50. And if we do have a continuation to the downside in the next couple of days, then I will show you why I think that could be a good zone for buyers to come into the market, and maybe I'll plot out that zone on camera on the episode and kind of explain my thoughts while I do that. So I also want to take a look at Bitcoin today because we've been talking about the range that it's in, but also this trend line that we've had on the charts since November of 2021. It did hit the trend line again and bounced off, and now we're kind of compressed in between our last zone, and it's a broad zone, and it goes from 17.7 on Bitcoin to about 19,000, and that's a big zone, but there have been buyers coming in at various points in that zone. And again, if Bitcoin were to break back below the 19,000, the last real point of support until we would get another really, really big sell-off is between 17,500 and 17,700. And if we break through there, I've explained many times on the show why I think this could happen, and I'll plot it out if we do break through this zone. But the next zone I would be looking for is anything between 9,000 and 12,000 on Bitcoin. And that sounds like a really big move, and it is, but there's not really any real support on the charts until we got there. So I wouldn't be surprised if we ended up seeing that, and I would be just as surprised if we broke through this trend line to the upside before then too. So that's what I'm expecting on Bitcoin. It is getting a little bit spicy down here. It's getting a little bit compressed, a little bit claustrophobic. It's looking like something's going to have to happen soon, and I wouldn't be surprised if it did. And it does kind of line up with what we're seeing on the S&P 500 as well. So a break to the downside would very much make sense on both of these, as the Bitcoin market has been correlated with equities in this sell-off. Whether that's justified or not, I'll let you make up your mind for now, but that's kind of what I'm seeing on the Bitcoin market. And I'll wrap it there because I like to keep these daily episodes short, but I appreciate you joining me today. Be sure to subscribe on YouTube and follow us wherever you listen to podcasts. I will be back every day that the market is open with one of these episodes, and I will also be releasing a video on the weekends, kind of going more in depth, and those are a little bit longer. But until then, thank you for listening, and I'll see you in the next one.